Hello and welcome to the day ahead. It is Tuesday, May the 6th. I'm Andrew Gagan. Well, the local share market is set to open lower this morning with the ASX futures off by around 0.25%. Renewed concerns over tariffs saw global equities weaken to begin the week while oil prices continue to fall. On Wall Street, the S&P 500 snapped its longest run of gains in 20 years, while the Dow also broke a 9-session winning streak. As well as taking profits, investors considered President Trump's decision to slap a 100% tariff on movies produced outside the United States. Netflix fell, having risen for the past 11 sessions, while Amazon and Paramount Global were also lower. The energy sector was the worst performing sector after OPEC Plus decided to hasten its output hikes. Ford suspended its annual guidance because of uncertainty around tariffs, saying the levies would cost the company around $1.5 billion in adjusted earnings before interest and tax. It reported after the close with its shares down about 3%. Barbie maker Mattel withdrew its annual financial targets, saying it would increase prices for some products in the US to counter rising input costs due to the tariffs. It said it would accelerate plans to move production out of China. The toy maker's shares were down about 2% in extended trade. Class B shares of Berkshire Hathaway fell after Warren Buffett announced that he'll step down as chief executive of the conglomerate. Tyson Food shares, they took a hit after the meatpacker missed quarterly revenue expectations. However, Skechers shares surged after the footwear maker agreed to be taken private by 3G Capital in a $9.4 billion deal. Well, US Treasury Secretary Scott Bessent has sought to reassure US markets, saying that they were anti-fragile and would weather any short-term turbulence, saying the primary components of the Trump economic agenda, trade, tax cuts and deregulation, are not standalone policies. They are interlocking parts of an engine designed to drive long-term investment in the American economy. Well, the latest US data shows a pickup in growth in the services sector last month as orders increased. That boosted a measure of prices paid by businesses for materials and services to the highest level in more than 2 years, signalling a build-up in inflation pressures due to the tariffs. The ISM survey added to solid jobs growth in April in offering assurance that the economy was not near a recession despite economic growth contracting in the first quarter. US Treasury yields have edged higher in response to the data. The US 2-year rising to 3.85%, the 10-year was up to 4.37%, with markets pricing a near zero chance that the Fed funds rate will be cut at this week's FOMC meeting. The US dollar has weakened against most major currencies, and the Aussie is up at 64.7 US cents. And Bitcoin is trading close to 95,000 US dollars. Oil prices have fallen further, down to more than 4-year lows, as an OPEC Plus decision to bring forward its output hike stoked fears about rising global supply, just as the demand outlook is uncertain. Brent crude futures down more than 1.5% to $60 a barrel. Copper rose 0.5%, iron ore up close to 1.5% to $98 a tonne, and gold has gained, driven by a weaker dollar and safe haven demand ahead of the policy decision from the US Federal Reserve. Spot gold up 2.5% at $3,329 an ounce. Locally today, we get a read of household spending for March, along with building approvals data. And on the corporate front, WiseTech has an investor update. That's your day ahead. See you again tomorrow.